Hello, my name is Steve Bigelow with the Candlestick Forum. Let the market tell you what the market is doing. That's what the Japanese rice traders profess when using candlestick analysis. As we can see, we are moving sideways. Very simple T-line rule. If you see a candlestick sell signal and a close below the T-line, you're in a downtrend until you see a candlestick buy signal and a close above the T-line. Note what the Dow did today. Bounced off the 50, closed right at the T-line. Stochastic still in a downward direction. Puts us in a very iffy state, which is basically what this market has been for the last couple of weeks, trading up, down, trying to come back up, but still moving sideways. The NASDAQ kind of confirmed it with when it closed below the T-line. Today it closed below the T-line, used the T-line as a resistance level. Stochastic still heading down. This puts the candlestick investor into the mode of any buying that they see, the candlestick signal should be awfully strong. For example, AXL has a very clear bobble breakout. That becomes a very high probability bullish trade. Wave 1, wave 2, bobble breakout, very obviously making wave 3 the same magnitude as wave 1. Or CNK did a best friend signal up through the T-line over the last couple of days. It's still trading up because of the strength of that signal, in spite of the fact that the market's moving or drifting slowly lower. This is a fry pan bottom breakout, as can be illustrated on ramp. Implies there's going to be a lot more upside. So pointing these things out because even when the market is drifting or moving sideways, the candlestick investor has very simple scanning techniques that allows them to find the patterns that are going to produce the high probability results. We also can see the J-hook patterns setting up in the insurance companies. All of them are trading higher, doing J-hook patterns. And this is what we call observe the obvious. The normal trading habits of human nature is when it's time to sell and it's drifting, they'll come back and see if a major support level is going to act as support. We can see there's a Morningstar signal right here on the 50, closing above the T-line, double bottom. This becomes a high probability bullish trade on positive trading, breaking this downtrend and also showing that it's supported on the 50-day moving average. This is not rocket science. This is just simple observations of what the Japanese rice traders have illustrated were buy and sell signals, and we can see exactly where those signals are occurring. Not because the signals are occurring at this level, it's the signals occurring because it immediately illustrates what investor sentiment is doing at levels that everybody else is watching. Works just as well on the short side. Lots of short positions that had big sell signals, and then another sell signal. Look at your bearish doji sandwich, that you can be shorting these stocks when you know the market is drifting lower. That'll be it. We'll see you in the chat rooms. We need to see what the market does over the next day or so. See what the results of the presidential debate will do. But as we can see on the Dow, it's supported but closed at the T-line. It's going to move in the direction how they open tomorrow. So if they open lower, that's still telling us the T-line's acting as resistance. If they open higher, tells us it might be heading up, but still in a very indecisive state. That'll be it. We'll see you in the chat rooms.